All right, what's up, everybody? Happy Friday. I haven't done any recaps because I haven't been trading in the account on Wednesday. CLSP, which is the biggest mover in the market, wasn't allowed on CMEG, so I couldn't trade it in the small account. Yesterday was kind of slow, so I didn't trade, and today I didn't trade in the small account. I'll get back at it on Monday and hit you guys with a recap. But today I'm just going to come to you with a quick video, try to do it in 5 minutes or less. On indicators on the screen, I told you guys I talked to you about the lines on the charts and what they meant. So let's go through mine, what I have, and then what you can possibly put on your chart and play around with. All right. So on mine, I have this blue line is a 9 EMA. All right. This is the 14, the red one. This blue line is a Vwap. It stands for volume weighted average price. This white is the 200 EMA. All right. EMA stands for exponential moving averages. You have two different type of moving averages. You have the simple SMA, and then you have the EMA, exponential moving average. All right, so the differences between the two is that the simple moving average will just take if it's a 10 EMA, I'm sorry, 10 SMA, it will take into consideration the last 10 candles, all right, the price action in the last 10 candles, average them out, and plot you a line based upon that information, all right, and it'll do it continuously throughout the day, okay. The EMA will do the same thing as if it's a 10 EMA, except it will do something a little bit differently. What it will do is it will take the more recent candles, the price action of the more recent candles, and give them more weight or give them more priority over the candles that occurred much earlier. All right. And because it does this, the line will follow the price action much more tightly. Not much more tightly, but more tightly. Okay. Because like if this is a 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. All right, if this is a 10 EMA a 10 EMA, all right, what it will do is it will give more consideration or more weight to 1, 2, 3, 4, these candles right here than it will to this. And because it does that, it will be closer to the action, okay, than a simple moving average. If I did a simple EMA right here, that was a 9, it wouldn't look that much different because there's only 9 candles, so it's not a lot of information. Um, but what probably will happen is that it would show, it would go out a little bit further and then it would drop probably down here. As opposed to dropping right here immediately, it would probably drop out about out here. All right. And that's because it's just taking the average of them all and using them evenly as opposed to using this one and giving it more weight. Okay. And so what do people use this for? All right. So I'll give you a mix of what people use it for and how I use mine. All right. People use these for support and resistance. All right. Like right here, you have it falling, falling, falling. If you took an entry down here and you were going to think about, all right, where do I definitely need to exit? All right. If it touches the Vwap again, if it's running like this, you may have gotten out of here, but if you were just following your indicators, whenever it came back to EMA or Vwap or wherever it line, then that's maybe your exit right there. That would have been your exit, all right. But then it provides support again, the 14 and the 9, and then it bounces back up, and then it crosses over. And this is kind of what I use the 14 and 9 for. All right, you see this, how this blue line is trading above, the 9 is trading above the 14, and it crosses over right here. Whenever it crosses over, this to me shows that there is maybe a break in the trend of the market. All right, so it was going up before. The blue is now under the red. All right, and I had all these red candles. It's probably going to trend down, and it does trend down, and it doesn't trend back up a little bit until the blue line kind of crosses back over the red, and then it goes back up again. All right, and that's how I use the 9 and 14. I also use the 14 as support and resistance as well, but I really kind of use it as right here. If I see something cross right here, I'm really not gonna. Yeah, I'm probably not gonna take an entry hoping it's gonna go up anymore. Not especially if these two cross. All right, and the Vwap is really just used for support and resistance. Like this big dip right here, if it starts selling off like this, people who are shorting into it are thinking, all right, if I'm going to short and it's coming down here, I'm going to probably cover near Vwap, all right? And people who were bullish on it, who are thinking, all right, I'm waiting for a dip entry, are waiting for it to come to Vwap to get in, all right? And because of this, you have usually the price action. You have the price action usually respects the Vwap and then it bounces back up. It's not a big bounce. I think it's like 3 cents, but it does bounce back up. And so just in this particular instance. And so that's what people use them for. And then it goes back, it breaks through, and then it goes near even breaks the 200 EMA, but then it comes back down, it breaks through the Vwap again, but it respects the 200 moving average. All right, and this is just long-term support and resistance. All right, if it ever trades below it, then it acts as resistance, and if it ever trades above it, then it acts as support until broken, always until broken. And this is what people use them for. The volume weighted average price. It doesn't take into consideration just the price action. It also uses the volume. All right, it takes into consideration the volume, hence volume weighted, and then the average price of the stocks. All right, and it can take it over the previous 2 days. You can change it in a settings, but I think mine's over the previous 2 days, and it includes pre-market activity as well. All right, if you have TD Ameritrade, you can add it to your charts just like this. Go to Studies, and if your chart's too small, it'll just have a little beaker. But you go to Studies. All right, all right, you can do Add Study, and then go find it and look for it. Like moving averages is in. I'm sorry, exponential moving averages is I'm in the wrong one. Is under here. So moving average exponential, moving average simple is just going to be under, where is moving average simple? Oh, I don't even know how to get. There it is. Super moving average. There it is. All right. So usually I don't go that way. It's much easier if you just do this, edit studies, and then over here, simple moving average comes up, exponential comes up, and Vwap comes up. All right. Vwap, I would just add. All right. And I don't mess with it. If it was exponential, I would just add, right? Exponential. And then I would go over here and change the time settings. All right. So if I wanted it to be a 15 and I wanted the color to be green like that, I click OK. I would click apply. All right. And then there's a green one right there. All right. You see the green? All right. You can use a 9, a 14, a 20, 100, 250. You can use whatever number you want. I just use the 9, the 14, and then the 200. And I always use Vwap on all of my charts. If you want to save that study set, once you get all the way you want it, you can click Save Study Set, and you can save it as something so that way if you come to a blank chart, you can click Load Study Set, and it'll load all the things where you don't have to go back and edit studies on every chart you ever pull up. I know I said do something on the 20th special, but tomorrow's not a trading day, so I'll have to do something special on the 20th of next month. I will see you guys Monday. Hope you guys have a wonderful weekend. I'm sorry. I'll see you Sunday. I'll talk about a couple things, and then I'll get out of your face. Unless you guys have any questions. I hope you have a wonderful weekend. Thanks.